What's up, everybody? What's going on? And welcome back to the High Performance Trader Bootcamp. And today we got a very important lesson, right? We're going to learn how to identify, adapt, and break down market conditions, right? So basically, lesson goals is learn how to identify who is currently in control of the market. Is it buyers? Is it sellers? Is it balance? What's going on, right? We're going to learn how to identify the trend and trade with it because the trend is your friend. I know everybody and their mother has heard that saying, right? But if it was as easy as saying it, everybody'd be rich. So I'm going to show you how to identify and adapt to market conditions and trade with the trend, right? And we're going to learn how to find the most probable trades by trading with the market current, right? So the market's been referenced to an ocean, river, right? And if you're trying to swim across that river to the other side of consistent profitability, you're going to have to swim with the current, right? You are never going to make it to that side swimming against the current. We're going to break down what exactly that current is and how to swim with it, right? And then we're going to learn how to develop a trade plan which is congruent with market conditions, right? We got an example. So let's break right into it. What are market conditions? So market conditions are the overall direction or flow and volatility of price action, which is dictated by large buyers or large sellers defending specific areas of value, right? We call them in this lesson critical levels. Right, so market conditions are the market temperature, right? The overall temperature of the market, the river flow, right? Which direction is it going? Like I said before, it's bullish, bearish, and balanced, right? Now notice here, right? Before we go any further, it's a large buyers and large sellers that are defending specific areas of value. So I know in the lesson before this, we broke down what areas of values are, right? Supply demand zones, end of day, pre-market high, pre-market low, right? All these areas that are very important that we must keep an eye on each and every single day. So the way we identify market conditions is by seeing and observing what exactly price action does in these areas of value. Now, based on what happens in these areas of value is going to dictate whether we are in bullish conditions, bearish conditions, or balanced conditions, right? So why do we identify these conditions at all? Right? So let's bring it back. We cannot move the market. Us as retail traders, we do not have the capital. We do not have the influence, right? We cannot move the market. So we must be able to identify smart money to be able to make consistently profitable trades, right? Smart money controls the direction. It controls the volatility of the market, right? And our ability to identify and adapt to market conditions helps us trade with institutions, right? With big money that controls price action, helping solidify our edge, right? So the best example I got for this is we are in an ocean, right? And the ocean has huge, great white sharks, right? 20, 30, 40 feet long, and they've been around for 100 years, right? These people have been in the game for so long and they have so much money that in the 80s, George Soros himself almost bankrupted London by shorting the British pound. Right? Just think about that. This guy has so much money. He has so many shares that he can control and bankrupt a whole country, right? Those are the people we're trading with, right? Now, those people have so much money, they have to provide liquidity for the other end of their trades, right? We broke this down in understanding the auction, but for every buyer, there must be a seller. For every winner, there must be a loser. Now, how this works is, if you're large money, if you have tons of money and you want to make a trade and put on a winning trade, you need somebody else to take the other end of that trade. You need somebody else to lose. That other person is me and you. That is why 90% of retail traders do not make it. I think it's even higher, right? So if you can learn to identify what large money is doing, you will have such a strong edge over everybody else in the market because nobody seems to be able to control themselves enough to trade with smart money, right? This is really big, guys, because this changed my life as a trader, right? I know you guys hear me talk about supply and demand all the time, which I love it. It's an amazing strategy, but there's so much more that goes into trading, right? It's never ending the amount of knowledge and information you need, right? But one thing that you need to be able to do to be consistent is identify market conditions, right? And I really need you to understand why, right? And the reason is we are going up against very large money with large influence, right? We can't move the market. They can. So all we have to do is identify what price action is telling us. And based on that data, based on that information, we go with bullish or bearish or balanced market conditions and trade all the way up into consistent profitability. Right, so with that being said, how do we identify market conditions? $1 million question. Very simple. In bullish conditions, buyers are defending critical levels, right? Areas of value, higher highs, higher lows, right? The break and retest, right? Which just means sellers are getting stomped out of their positions. So for the purpose of this lesson, let me just bring it back real quick. I'm running through how to identify bullish market conditions. Everything I'm saying is the opposite for bearish market conditions, right? So in this example, we have price continuously making higher highs and higher lows. But what does that mean in a market auction concept, right? So really fleshing this out for you guys to understand the psychology behind the price movement, right? We have critical levels that buyers are defending, right? Large money. Large money is defending 32285, right? Buyers show up once, twice. Area of value. Now, last time we were at 32714, sellers prevailed. Remember, sellers prevail mean there's way more supply than there is demand, decreasing the price. So then smart money then defends this position, rips price right back up to 32714, where the sellers that previously made money by shorting the market here then shorted again. But this time buyers prevail and price breaks out to the upside. Now, all those sellers that hopped in at 32714 are now in losing positions. They are now down 20%, 30%, whatever it may be, right? So now they are physically in emotional pain. They want to get out of their trade, but they're not just going to get out. They're going to wait for price to come back down to 32714. And now once price comes down to 32714, they stop out of their trade for their money back gracefully, right? They're thankful. But think about it. When a short seller gets stomped out of his position, he is actually buying the shares. Because how short selling works is you borrow shares against your broker at a higher price and buy them back at a lower price, right? That's called short selling, right? So it decreases the value of the commodity. So as price comes down or rips up and they're now in losing positions, once price comes back to the area they first started to short sell and they're not negative anymore, they get out of their position, which provides tons of liquidity to the upside, buying potential, buying pressure. This is why you get these break and retests. That is what it looks like, and that's the psychology behind it. If you were to be sitting in the pit of Wall Street, that is the human behavior you would see, right? So basically, in a nutshell, this continues to happen over and over, and price continues to rise. Now look, it happens again over here at 33872, right? So buyers rip all the way up to 33872 after a nice long rally. So you got people taking profits. You got short sellers stepping in. This was a previous supply zone from way back, right? But all those sellers that made money on this rip down, right? Price rallies all the way back up. They get stopped out of their position, adding fuel to the fire to the upside, right? So that is how you identify an upward trend, right? Now, I know it's very easy just to draw two arrows, upward trend. But like I said, guys, you need to look at this as a market auction. The sooner you can relate to this as an auction, right, and not just a software on your computer, the better you're going to do, because you're going to understand exactly what large money is doing. And that, my friend, is going to give you a massive edge. Okay, so now with all that aside, now you understand we are in a bullish uptrend, right? So now you must develop a trade plan based on those conditions. Right, so we're in an uptrend, right? We've identified an overall trend on the market on a much larger time frame, right? I'm a day trader, so a large time frame for me is a 1 hour, a 4 hour, a daily, even a weekly, right? Identify critical levels you're looking for buyers to defend, right? So in this slide, we just got price making higher highs. We just broke past 33872, so now this slide is what it looks like a little closer up. So we got 33872, price ripped right past it. And now the high of day is now 34104. Now high of day is our highest price right now. So that's my supply zone. So if buyers can defend that, I'll be looking to play longs targeting 34787, right? So we've identified an overall trend on a much larger time frame, which is bullish. We've identified a critical level we're looking for buyers to defend, which is yesterday's high at 34104. Now we've developed a trade plan and strategy that is congruent with market conditions, right? The break and retest off 34104, targeting supply, right? Remember what I said before? Trading with trend, trend is your friend. In uptrends, go long, and downtrends, go short, right? It's that simple, guys. So this slide is a slide I pulled directly from the Discord, breaking down a bullish scenario on QQQ on May 26, 2023, which was exactly before, this is the exact example we've been breaking down, right? So looking for buyers to stay above 34104, yesterday's highs, to complete this break and retest, and to the upside overall targeting 34787. Looking like buyers are defending end of day with 33972. So if we get strength and if we get volume, I'm looking for longs targeting 34787, because remember, there wasn't any supply up until 34787, right? So we previously broke past 33872. Now we're looking for a leg up to the next supply zone, right? So basically, guys, you trade your trade plan, right? So while in uptrend, notice how much stronger and how buyers defend critical levels from yesterday's high, right? So 34104. So basically, when you're in an uptrend, don't look to play short at supply zones. Look to play long off these supply zones once buyers defend it. We had supply over here at 34104, right? Instead of going short here, just assuming that since we are in supply, sellers will prevail. Instead, we are letting the market conditions dictate our trend, our goal, our trade plan, right? Which direction we're planning to trade, right? So look for the candles to respect your critical levels, indicating buyers are still in control of the market, right? And put on the trade targeting supply, right? Trading with trend. Remember, trend is your friend, right? Now, basically, guys, once you've knocked out the trade, the most important thing you can do, which I like to call trading metrics, is a measurable way to measure yourself and your ability, right? Log your trade and your ability to identify and adapt to market conditions, which will sharpen your edge. And what I mean by that is log your trade, right? And how well you stuck to your trade process, right? It's so important. I don't care about your P&L. I know you do, but the more you use and the more you measure your ability to follow your trading process, your P&L will never be a problem, right? Just stick to the rules, guys, right? And this helps build confidence, control, and conviction. So now that we've broke down all the market concepts, guys, I will see you in the next lesson. Welcome to Trading Strategies.